Welcome, welcome, welcome. Welcome to our wealth building webinar. My name is Marlon Smith and so excited to have you here. Today we're talking about risk management and insurance. And from what I understand, even with COVID-19, I want to say, and we'll verify, but I hate to even, I'm not even 100%, but I'll bring up my colleague to find out how many people have been impacted by COVID-19 as far as health-wise, as far as even death. And hopefully my colleague will be able to share with me because he's phenomenal like that, Tony Jackson. And so I'm really excited to be here because today we're going to be talking about risk management as well as insurance. And, this is very important. And as you can see with the Real Money Coach, we're building each session upon the next. And so today we're going to be talking about a very important topic. And, sometimes you think, wow, it has a negative connotation, right? But the truth of the matter is wealthy families have been using insurance and risk management strategies to create legacy wealth. And, our scripture for today comes from Proverbs 13:22. A good man leaves an inheritance to his children's children. I mean, let that soak in, right? A good man, a good person leaves an inheritance to his children's children. And so that's powerful when you really think about it, when you unpack it. And so, with that being shared, I want you to just understand we're really committed at the Real Money Coach to sharing information that is relevant and can be, I would say, executed, from the standpoint that, we're sharing this information so that you can take action. Because it's one thing to get information, but the real power is when you apply the information. And so let's just do a real quick recap of what we've done. And I want to also say thank you, Nations for Church. Wendy Casey and her team. It's been phenomenal because they realize, especially even prior to COVID-19 and just the health impact, but also the economic impact. One of the things they were saying, like, we want to teach financial literacy. And so we were going to do live seminars, but when COVID-19 and the stay-at-home order was in place, we said, okay, let's move it to online. And now we've got people that love for you to type in where you're watching from. All right, because a lot of people are watching from all over the world. And so one of the things that I think is really important is also for those of you that are tuned in, go ahead and click the share button on your, Facebook. If you're using Facebook to watch us, click the share button so your family, your friends can also be inspired during today's important webinar broadcast, because it is important. And so I want to just say, type in where you're watching from. We'd love to see. Because again, it's each one of us is here to make a difference. And, we love always to see, like, where are people watching in from, because the phenomenal thing about it is when it comes down to it, it's all about each one of us stepping up, each one of us really taking it to the next level. So I see we've got, James here. Okay. We've got Wendy. We've got Brother Day from here, Boston. Okay. James is from Massachusetts. All right. Good. Knoxville, Tennessee in the house. Okay. Hey. All right. Oh my goodness. It's so good. What's up, girl? Oh, it's so good to see you. And so with that, what I want you to understand today is very important. We've been building on this whole financial literacy. Savon's on. And one of the things I want you to understand is that everything's building upon. So we first talked about financial psychology. Right? Financial psychology, your mindset when it comes to money. What is your mindset circled around money? And then we moved into budget, right? Budget. Okay. I see myself prosperous. I can see myself with abundance, but now I've got to take action. I've got to dictate where my money goes. Right. And so, we talk about a spending plan, right? That's what my colleague says, a spending plan, right? Because some people think budget is so negative. Well, a spending plan, giving direction to your money, where it's going to go. And then we moved into credit, right? And we talked, that was really phenomenal, right? I mean, we talked about credit and how to increase your credit score and things you can do. And what is your credit score comprised of? And then number 4, we talked about really, debt and loan, right? And we talked about how do you get out of, this debt? Because, the borrower is a slave to the lender. And so we talked about that. And then today, we're talking about insurance and risk management. And I'm so excited because this is one of my most passionate subjects, because I was really enlightened to the importance of having your financial house in order. So again, Welcome, everyone. Get ready, get ready. For those of you just joined in, go ahead and click the share button so that your family, your friends can also tune in. It's very easy. And click the button on the Facebook page. Share this webinar broadcast so it also shows up on your Facebook feed. And again, the scripture for today comes from Proverbs 13:22. A good man leaves an inheritance to his children's children. And so let me go ahead and bring up my colleague, Tony Jackson, who's really phenomenal. And this man has over 22 years of experience of success in financial services. And so let's bring Tony up now.
Good morning, Marlon.
Hey, what's up, brother?
Nations Forward. Good morning, people from across the nation. How are you today?
I think they're doing good, Tony. I think they're doing good.
Everybody's doing well?
Right,
Good, man. I'm looking outside, man. It's a phenomenal, beautiful morning. It's a great morning that we could be in the safety of our homes, the comfort of our homes. We can have our cup of coffee or whatever, you know, our little pastry, Danish, whatever you may be doing, and get some knowledge. And so we're really excited about it. Really excited about the series, Marlon. You've been doing a phenomenal job kicking these off each and every week. And so, and again, I want to, you know, you did it already, but I want to just give a shout out to Wendy, Nations Forward, the elders there, you know, everyone that's making it possible from their perspective. And so we're just excited. I mean, it's great information. And, you know, a survey went out this week, right, to everyone who's registered.
Okay.
And so we really want to encourage you to make sure that you complete that survey. Your feedback is important to us. Understanding, you know, what classes have you enjoyed? Which of these classes that you've seen so far have you enjoyed? You know, you can give a shout out to the instructors if you got something really good to say. My name is Tony. If it's not so good, well, anyway. So we're just really excited about it and excited about having all of you participating in this process. And so, and where our prayer has always been that this will be a blessing to all people, especially the people of God. We're doing it specifically for Nations Forward, but the wonderful thing about being in the environment we're in now is that we can be here, we can do something locally, but with being in this virtual environment, people all over the country can benefit from it. So I appreciate everyone who's tuning in. You guys have been faithful each and every week, and so we're just going to continue to give you great information.
All right. All right. So, man, Tony, why is this important? You know, we're talking about insurance and risk management. Why is today? I mean, I laid the foundation for what we did the previous 4 weeks. And for those that, you know, maybe haven't been to some of our previous webinars, you can, you know, definitely peruse this Facebook page, or you can go to, you know, YouTube. But here you can watch some of the previous. But today, Tony, you know, you talk about, we're moving from defense to offense. And so why is today so important?
Well, I think today is very pivotal because, you know, when we start thinking about what things can we put in place so that we are advancing our plans, our wealth, intergenerational wealth, all those type of things. And when we start talking about risk management and insurance, it's kind of a transition point because obviously, obviously protecting your assets, right? Protecting your assets. That part of risk management is still kind of defense, but it really kind of shifts towards the offense, because understanding that if I have the proper insurances that we're going to talk about, health insurance, life insurance, auto, home, all those types of things, it really protects me so that if anything ever happens to those, that it doesn't take away from my wealth to replace those items. And so just making sure you have that proper balance. And when we bring that first screen up here in a little bit, you're going to see it's a teeter-totter. It's a balance. And so there's a balance between how much risk you take and how much risk you pass on. Now, personally, I think this is very important today because of what's going on in our society. I mean, obviously, COVID-19 has been an issue for us for the last 6-8 weeks. I guess mid-March or so is when we finally woke up and said, hey, this is a real issue. And then in light, we have Mr. Floyd, who lost his life at the hands of the police. We have others in Louisville and, you know, countless others across the country. And so we're going to later on, and I think it's important. And so I really hope everyone stays with us, because later on, we're going to show a clip from our live show on Thursday night in which we had Eugene Mitchell on, and we were talking about this insurance risk, life insurance, as it relates to the movement that we see right now, Black Lives Matter, and those types of things. And so it's really, really relevant, really current. And, you know, we like to show a lot of videos. And really, I have, in my search for videos to kind of show the impact of what we're talking about, haven't seen one as good as what he shared with us on Thursday night. So we're going to share about 8 minutes of that later on in the show. And so, and then we're just going to come back and really, everyone, we want to just have a real discussion about the things that we're talking about. And we want you just to feel free to open up and share, because this is the reality that we're living in. And I'm very prayerful that what's going to happen is that over time that we're going to, over time, we're going to see some real change. And that's what I'm looking for, is just that real change. I know many of us are praying for it, because we're at a tipping point. And, you know, and I was thinking about it, reflecting on it myself, is now you have the NFL come out and said, hey, we made a mistake. We should have paid attention. Just about every corporation is putting something out. I read last night that Michael Jordan and the Jordan brand is donating $100 million over the next 10 years. Nike did 40 million the day before. And so we have a lot of companies, a lot of corporations that are now putting money behind the movement. And that's really what it takes. It takes some money behind the movement. And so as I was looking at it, it's like, what's different between this time, you know, with Mr. Floyd versus Freddie Gray versus Mr. Scott here, even in Charlotte. And I think we've really gotten to the point where we're tipping the scale. We're tipping the scale. And when you start getting corporate dollars and you start getting CEOs and those types of people who have influence and money to start saying, hey, listen, we need to do something, that's when real change will occur. We've seen it historically. You know, the bus boycott in Montgomery, Alabama, led by, you know, the Christian leadership, Southern Christian leadership, you know, led by, you know, Martin Luther King. It really didn't change anything until there was an economic impact. And, you know, I share with people a lot of times, and I go back and I read some of his, you know, the world would call them speeches. I call them sermons. The night before he died, he was calling for a boycott of some companies because he wanted to see change happen. And when we start talking about change and we start talking about economics, that's when things can really shift. And so that's on a very broad sense. And what our class is focused on is, what can you do as an individual in your own personal finance and your own personal risk management, your own budgeting, your own things like that, that can now affect not only you, but generations to come.
And so, yeah, as you can see, I mean, Tony's really hit some really great points. And, you know, one of the things that I think, you know, things happen for a reason. And, you know, I believe, you know, there's going to be some change as a result of all that's going on. And I want to thank everyone who's really, you know, been moved, you know, by the situation, things have come to light, and with the peaceful protests and whatnot, I mean, it's just one of those things where I think we've all been moved, because again, we have to, either you're part of the problem or you're part of the solution. And sitting back and just watching, that's not necessarily part of the solution. And so, I want to say thank you for all of you that are watching, and your family, your friends that have, as Tony said, if each one of us does our part, right? I mean, it's not just Michael Jordan, it's not just, these corporations, it's all of us,
Right.
stepping up, and, we're part of the human family. And what's so exciting is that, as Tony said, the economic impact, right, of COVID-19. I mean, I just pulled up in my opening, I was saying to myself, okay, what is the numbers? Well, in the United States, there's been 1.94 million people that have become COVID-19 positive. 1.94 million. 454,000 have recovered. Okay. However, 111,000 people have died. And so the question is, are we ready? Are we prepared? What happens if you were to get sick? What happens if you're, the breadwinner in your home was to die? Could your family continue? Right? I mean, that's what we're talking about. And so there's a connection between your health and your wealth, right? And so that's why I think I'm very excited, about this. I believe that our guest Eugene said that out of the 111, like 20% of them were African Americans that died. And so with that, it's very important to, really understand the economic impact. So what do you think, Tony? What's your perspective on that?
Yeah, I think absolutely, and I think he really hit it on the head. I mean, he did a phenomenal job talking about 20,000 African Americans have lost their life due to COVID-19, and so the economic impact, and we don't want to steal the thunder. We're gonna unpack that. We're gonna let you guys hear the video, and again, we want to get your feedback. And so what I'd like to do, Marlon, is let's just kind of get into the lesson for today as we're talking about risk. And then when we conclude here, in about 10 minutes or so, we're going to show that 8-minute video, and then we're going to unpack that. And we really want everyone to just kind of chime in and let us know what you think.
All right,
so
let's
get into it. Let's talk about risk management. So when we think about risk, it's a balancing act. Really, it's a balancing act between how much risk do I take and how much risk do I give away. And so there's really four really reactions to risk. And the first is risk avoidance. So with risk avoidance, what you're basically doing is you're eliminating yourself from a situation to avoid risk. And so, if you don't climb the tree, you don't have risk of falling out of it. So risk avoidance is when we take those necessary actions to avoid the risk. Okay. And then the second one is risk reduction, where we take measures to reduce the overall risk in a given situation. And so let's just say, for example, we look at driving. We got a picture of a car there, right? Let's talk about driving. So if I'm driving and I'm driving at excessive speeds, that's putting me more at risk. If I reduce my speed, then my overall risk is reduced. And that's an example of risk reduction. If I drive within the speed limit, then I reduce my risk. And that can be applied to a lot of situations. It could be applied to us in terms of from a health standpoint. If I eat the right foods and I exercise, then my risk of health issues, my risk of diabetes, my risk of high blood pressure can be reduced. Now, we know that some of those things are hereditary, but what can we do? What actions can we take to avoid the risk? And then there's risk sharing. Risk sharing is where we are actually taking some of the risk and we are putting it through and we're giving it to someone else. And that's really insurance. Insurance is really risk sharing. So if I have car insurance on my car, I'm sharing that risk for a cost to the insurance company. Now, the reason why it's not a complete shift of risk is because obviously I'm paying for it. And then secondly, I have copays, I have deductibles, I have those types of things. So what I'm doing is I'm sharing that risk with whatever car insurance I have. Same thing with your health insurance. The health insurance, I'm sharing the risk with the health insurance provider. Okay, the risk that I will need medical care. It's a shared risk because there's copays, there's deductibles again, there's out of network expenses and a lot of different things, but I'm actually sharing that risk. And then the fourth one is risk retention. And that's where for a given risk, and we budget to prepare for that risk, right? So risk retention is that I have a savings account set aside where I'm putting 6 months of my savings. Why is that risk retention? Because I'm putting that away so that if for some reason my job goes away or COVID-19 hit, right, I have a reserve setting there prepared for that risk. And so that's risk retention. So we want to do some things to make sure that my risk retention is in place. So those are really the four components, or four things, four reactions, four different aspects of risk management that we want to talk about. And we just want to make you aware of it is, and some of those things, we've heard things before. I've heard this, a lot of times, I'm insurance poor. But there are certain things we want to do. Is like, when we start talking about using, again, the example of car insurance, if I want a $100 deductible, right, I'm going to pay a larger premium for that. How do I manage that risk? So I may have $1,000 deductible and pay less in premiums, and therefore that's where I'm reducing the risk. And so all those types of things are involved in there. And so it's very important that we understand the risk. Now, when we really talk about risk and we talk about risk management, obviously the biggest component of that is insurance. And so there are different types of insurance, but insurance is really an agreement that protects you and your property in the case of an accident, a case of an injury, a case of damage or theft. That's really what insurance does. It's really a legal contract in which the company, for exchange of premium, is saying, if something happens to your stuff, we are going to cover it. And basically, everyone puts their money in a pool. It's like put it in a pot, and everyone's money goes into the pot. And those who have an accident, those who have an illness, get money out of the pot. And so that's really what insurance is all about. It really protects your investment. It really protects anything. So if anything happens, you're covered. And one of the things from a financial standpoint, a financial planning standpoint, is to make sure that you have proper coverage. Because again, like I mentioned a few minutes ago, if something happens and let's say, for example, your car is one of the more expensive assets that it can be classed as an asset, but it's one of the most expensive things that you buy, right? And if you do not have insurance on it and the car gets stolen, you're out of that money. Now, and if you have a loan, if you have a payment on that vehicle, you still owe the money. Now, if you paid cash for it, you're out of the cash because you got to go out and replace the car. And so having proper insurance in place is really quite fundamental to the financial planning process, to make sure you have things properly insured, whether, to replace that vehicle or at least replace your investment into it. And so then, here's some things, some common insurance is, car insurance, obviously home insurance. And when we talk about home insurance, I also want to say, renter's insurance is important. And many people forget about renter's insurance because obviously when you have a house, you have a mortgage, the mortgage company is going to require that you carry insurance. They're going to make sure that you do that. They're not going to let you have that house with and owe them X amount of dollars and it not be insured. They're going to protect their investment. Okay. Well, when you're renting, what about your belongings? What about your furniture? What about your clothing? What about all those things? If something happens, some type of peril happens, like a fire or theft, you want to make sure that you have insurance to protect your belongings. And the other thing that renter's insurance and homeowners insurance and car insurance all have in common is liability insurance. And liability insurance is basically if someone were to come, slip and fall on your property, or you have a car accident and you're at fault, or something of that type of nature, that now they can sue you for liability. What they're basically saying is that there was some type of, whether it's intentional or unintentional negligence on you as the renter, or you as the homeowner, or you as the car driver, or the owner of the vehicle. There was some type of negligence that took place, and now we're going to hold you responsible for that. And so liability insurance is very, very important. So they all include liability insurance, and then health insurance. Health insurance is awfully, awfully important because, again, medical bills can be very devastating. We know that the majority of foreclosures, bankruptcies are due to some type of major medical crisis. Now, oftentimes people have insurance and, and still are in those situations. But imagine if you don't have the health insurance. And I know that we've had a issue in our country where there's many people in our country that have been uninsured. And I think even with the Obamacare that come along, there's still a lot of uninsured people out there. And so you want to make sure that you have proper insurance. And not only that is that the devastating part is we don't see those things coming. Most people who have some type of major health issue, heart attack, stroke, or something, they didn't wake up this morning and say, that was in their plan. It happens unexpectedly. And that's why we have to have the proper insurance, medical, dental, all right, is another important, vision, all those type of coverages. And then lastly, the other major component of insurance that we often think about is life insurance. And life insurance is really at its purest, simplest form, a protection against lost income. And we're going to unpack that a little bit later in the video that you're going to see. But basically, what we're saying is if something happens to you, where's the income going to come from that you are bringing into your home? And then from there, everything else kind of stems off of that. Okay. So the income is used to pay the mortgage. So you got things like mortgage life insurance, or just the income replacement, the pay the car note, the rent, the house note, all those types of things. So insurance is very important, but it's a loss of income. Now, what we have seen so often is that we have relegated insurance to being just something that covers the cost of a funeral. And there's a lot of history behind that because, it wasn't really into the 1950s that African-American people in our country were even allowed to buy anything more than a burial policy. And so for years, and we've only bought burial policies enough to cover the cost of the funeral. And it's so much more than that. And obviously, in advanced applications, it also is a way to accumulate wealth with some very tax advantages, and also pass on that wealth to the next generation. And so that's just kind of a quick overview of just the different types of insurance. I want to drill down a little bit more on the health insurance, because I know health insurance is a very important part. And when you look at your, if you look at your pay stub, if you are paying for health insurance, you realize that a lot of that comes out. Health insurance is a big ticket item. There's different types of health insurance. Most common, what we're seeing today is HMOs and PPOs. HMOs and PPOs, they have different levels of premium, different flexibility, but basically what they do is put you in certain networks that you can go to. Your doctor has to be in certain network in order for you to avoid extra costs, extra co-pays. Many of them have wellness benefits, so that if you can have a wellness check every year to keep your health and make sure that it stays good, because the insurance company knows that if you are doing the proper maintenance, then the major medical things that you might end up in the hospital for, surgery and that type of thing, can be avoided. So it's good for you and it's good for them. Premiums, obviously is what's being paid either by your employer or by yourself. And I just want to say this, even with Obamacare, I always encourage people to make sure you take a look at that every year. If you do not have health insurance through your employer, to see what it will cost you. There's a lot of great cost-effective options out there. Certainly, you can seek the advice of a health insurance professional. If you get one of those plans and it's a no-cost plan for you, you don't pay anything. The agent is paid by the company or by the Affordable Health Care Act. So you want to make sure you do that. Be mindful of when you do sign up for insurance, what your deductible is going to be and what your copay. Now, to explain the difference between those two, the deductible is the amount of money that you have to pay first. So let's just say your health insurance plan has a $500 deductible. So before anything is paid, you're going to have to pay the first $500 in medical expenses. Now, the copay could be an 80-20 plan or 70-30 plan. So what that means is that after the deductible is paid, then any eligible, and it's very important to remember, eligible medical expenses, they will pay 70% of them and you will pay 30%. Let me give you an example. Let's just say you have a medical bill that's $1,500. And just in this example, to make it simple, you've had no other medical expenses. You have a $1,500 medical bill and you have that $500 deductible. Well, guess what? The first $500 is out of your pocket. Now, we look at the other $1,000. If you're in a 70-30 plan, the insurance company is going to pay 70% of that $1,000 and you're going to pay the $300. So in that particular instance, what's going to happen is then you're going to be responsible for the $300 of the next $1,000 and they're going to pay $700. So if you look at that one bill, $1,500 bill, you're going to be responsible for $800. The insurance company is going to be responsible for $700. Now, obviously, the next bill, let's say you get another bill and it's $1,000. Then now you have where the insurance company is paying $7, you're paying $3. Now, so you have 70-30, you have 80-20. So you have to realize what you're doing, and then also prescription coverage in there. All right. So those are all aspects to think about. What type of things are excluded, and then many of them have what we call an out-of-pocket max. So your out-of-pocket maximum, in the example I was just using, let's just say your out-of-pocket max is $1,000. You paid $800 out of your pocket, and then now you have that $1,000 bill, and it's a 70-30 plan, but your max out-of-pocket is $1,000. So you'll never pay more than your max out-of-pocket. In that case, you would pay $200 in that next bill. So don't want to get too far in the weeds, but I think it's important that when you are looking and you're selecting your health insurance options to understand how all that's going to work. And then, of course, you know, you have the claims and all those type of things. And you want to really keep an eye on your medical bills, you know, and, you know, as we talked about, and those of you who may have been on our show when my daughter Adrian did it, is, you know, medical bills sometimes creep in on your credit report and they have an adverse effect on your credit score. And actually, they should never be on your credit report. And so those are types of things that you want to be aware of. Now, another item, another big insurance cost that I want to talk about is long-term care. Many of us think of that as nursing home care or also assisted living. So long-term care, what it does, it pays for the expenses that are not covered by your health insurance or by Medicare. Now, normally what happens, and I'll just deal with this from a Medicare standpoint first. Normally what happens with Medicare is Medicare will pay the first 90 days of care in a nursing home. And they'll pay so much towards that. And then after the 90 days, now you become private pay and those types of things, unless, and a lot of people have heard about the spin down process. The spin down process says that it's really Medicaid. So what happens is it switches from Medicare to Medicaid. Now, Medicaid is really a program that's designed for low income. So in order to get Medicaid to pay any of the long-term care, nursing home care expenses, you have to spend down all of your assets. Really, you have to have less than $2,000 in cash. They'll let you keep your home. They'll let you keep car, wedding ring. But basically, you have to get rid of all your assets in order to get any of that paid for. Now, the other thing about it is you can't decide today that I'm going to get rid of all my assets because there's a 5-year look back period. So they'll go back and they'll look 5 years. And if you had, let's just say you had 50 grand in your account, they want 5 years of records. They're going to look for 5 years of bank account statements. And they said, well, you know, you just got rid of $50,000 2 weeks ago. So we're not going to give you this benefit until you spend that $50,000 first in the care. So it's a very expensive proposition. And as our society is getting older and that need for care comes up, that it's important to do the planning. Now, here's the thing that we know. We know that there are over 10,000 people turning age 65 a day for the next 18 years. So there's a lot of people that are going to be going on Medicare. There's a lot of people that are aging that may need this type of care. And the average stay in a nursing home is somewhere around 2.5 years. And so when you think about, many of them are, you know, $150, $200 a day. You know, it's a very expensive proposition. We have to plan for it. Now, because of it, because the long-term care costs are so extreme, the premiums required for long-term care insurance is also pretty expensive. But, you know, when you get to that stage and as we are saving for our retirement, and we're going to talk about retirement next week, as we're doing those type of things, we also have to take into account and also properly plan for these type of risks. And so with that, that kind of moves us into the last kind of formal thing that I want to talk about, and that's estate planning. Estate planning, in a sense, is just making sure that you have a will, making sure that you have a trust, and just to give you just a quick, and I'm not an attorney, I'm not giving legal advice, but just a quick overview. Here's the thing. A will, what it does, it tells the probate court what to do. It doesn't avoid probate. It doesn't do anything. And we know that there's been people, famous people, died with no will. I mean, you think about Prince, you think about Aretha Franklin, and Aretha Franklin supposedly had several wills written around the house. But you want to make sure if you got a will that you get it properly filed with the Register of Deeds and those type of things. But a will simply tells the court what to do. It does not avoid probate court. And if you are, particularly if you are single, you want to make sure that you have a will. Now, if you are married, quick claim deeds, everything goes to the spouse. That's pretty seamless. But if something happens to both of you, you need to have that will. Otherwise, the court system will be determining who gets your stuff. Okay. Now, the other thing is, especially when I was back in Michigan, I know Wayne County, they had it took 8 to 12 months to get through probate court. And so while you're doing this, all this is taking, all this time is going by, and you got to find out what to really do. Okay. And so here, so you got to really be careful and make sure you plan for that. And I would tell people this too, and we started saying this with seniors, is that if you rent an apartment and your name is on the lease, and something happens to you legally without a will or without a court document, they're not even supposed to let anyone back into that apartment to even, do the things that are necessary for fine expenses. So, so those are just, again, it's very important. Now, when we go beyond, now we start talking about trust and having a trust. Trust really avoids the probate. It really avoids probate. It protects your assets. It protects your assets from the spend down process. It protects it from some of the taxes, because of course, estate taxes, there's very high limit deductions on there. So, unless you're very wealthy, you're not going to pay estate taxes. But what it does do, it does dictate what happens. And it totally avoids probate court. It avoids the cost of getting a probate attorney. It avoids all those type of things if you have a trust. So, we really recommend, if you have any assets, that you want to make sure that you look into having a trust, putting your belongings in a trust. And just very quickly, again, we're recommending that you get legal counsel, but the things that you don't want to put in your trust is like your car, because the risk is so great of having a car accident. If your trust owns the car and you have an accident with the car, now that pulls the trust into it. So normally what you want to do is you want to put all your assets in the trust. Your bank account is in the trust. Your all of your assets are in the trust. Okay. And then and so you have all your assets in the trust, your home, your car, and all that. Now, no one knows you got this living trust going on, but it just protects you. It protects you from creditors, because the trust is its own separate entity. And so if you get in trouble, or you get audited, or something happens with you, your trust is protected because it is its own legal entity. So, yeah, so those are some things I want to share real quick. And we could open up. I see we got a couple questions out there, Marlon. Let's see. Wendy says, what happens if an ex-spouse, as far as insurance benefits without a will? Well, here's the thing, ex-spouse. That's a very good point, Wendy, because one of the things we always recommend is that you review your beneficiaries, because so often people forget to do that. So if you go through a divorce or your spouse dies and that type of thing, you want to make sure that you change those beneficiaries. And I often tell the story of a lady that died, and I ended up having to pay $100,000 to her ex-husband because she had because she didn't change her beneficiary. And so you want to make sure if you change your beneficiary, you're going to be good as far as the ex-spouse. Sometimes
in that case, Tony, I think the thing is you know, you got to share the fact that she had gotten remarried and she had children. I think you need to go let people know, because when you shared that story, you know, a previous seminar, it just really, I think the audience, and I'd like for you to unpack it, because, you know, it's one thing to say it, but give, you know, just give the 30-second, you know, recap of what happened. You know, she, you know, remarried, you know, divorced, remarried, but go ahead.
Yeah. So here in her case, what happened is she was married, she got divorced, got remarried, had kids with her new husband. She died pretty young, in her 40s, of cancer. And then, so they reported the claim to us, and, you know, and so her ex-husband was still named on the policy as beneficiary. She never changed it. And so what happened was that he came in, I sat him down, I tried to talk to him. It's like, look, you know, you need to at least make sure that you make sure kids get some of this. And he just simply said, well, whose name is on the check? And I said, yours. He just took it and walked out of my office. There was nothing that we can do. So that, you know, so those are just type of things that's planning. And I see a lot of great comments about rental agreement and emergency contact list and those types of things. And those are great. And, you know, someone asked, do you need $1 million for trust? And obviously, you know, the answer to that is no. A lot of people can use trust document, even if, you know, they're not so forth, if they're not consider themselves wealthy. So yeah, so it's very important. And I'm loving some of the comments here. Whenever there's a life-changing event, contact your agent. That's absolutely true, so that you can make sure that your beneficiaries and those types of things stay current.
So one of the things that, you know, we're about to bring up the video, and, you know, I like to, you know, there's so many, you know, I'm looking at, I mean, it's a lot of comments, and, you know, we're respectful of time. So I would encourage you, look, we have a complimentary, no obligation financial coaching session. So you can just send an email to info@therealmoneycoach.com, because, you know, right now I'm saying this chat box is really, you know, blowing up, because people are like, what about this? What about that? And again,
I wish we had time to answer all those questions, because there's some excellent questions out there. So
let's go ahead, Tony. Let's try to knock as many questions as we can. However, also, you know, info@therealmoneycoach.com. I really encourage you, you know, just send an email. We'd love to hear from you. You know, if you have some questions, we can respond to your questions in the email, or we could schedule a complimentary, no obligation financial coaching session with you. So,
absolutely.
You know,
and here's the thing I want to say about that. If you do a coaching session with us, you understand that there's some things that we're experts in, there's some things we're generalists in, and so we can just have a conversation. But part of that conversation may be, hey, listen, you need to go talk to so and so, or you need to go talk and get this advice of a professional in this area. And so those are the type of things. But I really want to get to the video. I know some people may have to jump off at noon, but I think the information that Gene shared was so important that I just want to be able to show that before noon. And then those of you who want to stay and have a discussion about it, hang on with us. You know, we may stay on for another 10 minutes or so, just unpacking some of the things that you're about to hear. Now, Eugene Mitchell is the author of a book. The book is entitled, and I have my copy right here, Closing the Racial Wealth Gap, 7 Untold Rules of Black Prosperity in our Black community, Prosperity and Legacy. And so what we're going to do is, again, we're going to roll. He's been on our show twice, and we're just going to roll a clip of about 8 minutes of the last time he was on our show this past Thursday, because I think it's very important. So I'm ready to get into it, man. I'm ready to get into it. And you know what we're gonna do, man. Rule number 1 in your book.
Yes.
Rule number 1 is to know yourself and to know your worth.
Yes.
So in light of what you see going on, unpack that a little bit for us today.
Yeah. See, this gets really deep, and to your point, when I wrote this, it was in my mind of what we need to know, what we need to consider as a for our families and as a community, but to apply it today, I think takes it to a whole new level. We're fighting for social justice, the treatment of the police, and we're saying we're not valued as Black lives. Right. And we're saying that Black lives matter. And as much as I wholeheartedly agree with every part of that, where I was going with chapter 1 and where I believe we have to start to move this conversation for ourselves and for those outside of our community is to understand, Black lives matter, but what is a Black life worth to ourselves, to our family, and to our communities? Because then you can really start to take on the significance of the absence of that life, right? So I think that we've been conditioned, and you think about, we talk about this white superiority and Black inferiority. You talk about sort of what we've seen is the imagery of Black men, being shot and going to jail, and I think we've become numb for so long. It's not associating value to those people that are being taken away, and I think that's a misstep and a misfortune that we need to reframe and correct, right? Then in saying that we are valuable, and that every Black person that doesn't make it home is a significant impact to us. Right. So when George Floyd didn't make it home, right, with not only the emotional toil, the angst on his family, his daughters and his families and the likes, but what is the economic impact that he's not bringing home his wage to his family going forward? Right. And who's going to supplement that? Who's going to make that up? And I think that's where I was going in this first chapter. Know yourself, know your worth, because I'll give you the example of where this light bulb really went on for me. So just to recap a bit of my background, I spent 4 years as a prison guard down in Miami. I knew that wasn't the path, and I leveraged it as a stepping stone to finish my undergrad in finance, and then I applied to NYU Stern School of Business, and I went there to get my MBA. Moving into corporate America after I graduated, I ended up at New York Life Insurance Company, one of the largest financial services companies in the world, really, and got hired into a leadership development program, and just thought I was on the track, moving up, doing everything that I was supposed to do, on par with everybody that I went to school with, in the way of salary and sort of the ways and means that I was accumulating assets here and there. But 2 years after 2 years into my job, I completed this leadership development program, and I got a letter into office mail that threw me for a total loop. Right? It said that they wanted to take out. They said, "Congratulations on your promotion now to an assistant vice president. As a new appointed officer of the company, we want to take out a $2.5 million life insurance policy on your life to benefit the retirement fund at New York Life."
Wait a minute. Hold up. And a lot of people don't realize that happens in corporate America.
Correct.
Corporate America will take executives and they will put a life insurance policy on them, key person insurance,
that's right,
those type of things, because they're saying, hey, listen, Eugene, you are valuable to this company.
Say it again. You're valuable to us and our company.
Right.
For what you do, for what you bring, for what you produce. Absolutely. Keep going, brother.
Yeah. So you're valuable to this company for what you produce, what you bring in the door. And if you are not here, we're going to be at a financial loss because you're not here anymore. Now, if the company is valuing that way, what more value are you to your family?
Okay. So you're getting beyond me here.
Come on now, come on.
Hold on. I know you know the story here, but this is exactly it, brother. So I asked the folks, well, what is this? And they said, well, it's called corporate-owned life insurance. To your point, it's like you're a key person here, and this is ways that we can protect ourselves in case anything happens to you. I said, well, I get that concept, but something that's baffling me even more. Where does this $2.5 million number come from? To which they said, well, that's what they value you at. I said, I don't get it. They said, well, that's what you're worth for the work that you do here. I said, I don't get it. So they said, well, okay, there's different ways to calculate your value and your worth for what you do here. And the easiest way to do it is to do a current value of your future earnings, right? They said, here you are, 30 years old, making $100,000 a year. We expect you to work here at least another 25 years to you, 55 to 55 at least before you retire. What is $100,000 a year for 25 years? $2.5 million. See, they weren't just looking for what I bring now, but for the long term. What's the value long term that I bring in to the company? 2.5 million, and that's just the base salary. They didn't talk about raises. They didn't talk about bonuses. They didn't talk about anything in the deferred compensation. They just said for the work that you're doing, the base salary, we're going to value you at $2.5 million. And I said, this is the first time I ever heard it. And they said, well, what do you mean it's the first time you've ever heard it? They said, well, don't you have a $2.5 million policy on yourself? To which I said, no. And they said, well, why not? To your point there, Tony, they said, well, if you don't make it home tomorrow, do you realize that that's $2.5 million that your family won't receive over the next 25 years? And what will they have to do to make up that shortfall? Right? Will your wife and the children be put out of the house? Will she have to find somebody else to take care of her? Will your dreams and hopes and aspirations for the children to go to college and beyond all be set back because you don't make it home? And honestly, I had never thought about it. And really, as I did start to think about it, I became extra sad because I realized the company valued me more than I valued myself. And that's what I realize and believe, that we have to start to reframe and reprogram our community because we don't see our own value, right? Like the company saw me more valuable than I saw myself. And then let me tell you, it took me a lot of years to buy $2.5 million of insurance on myself, because as a Black man in America, nothing has ever told me that I'm worth that much before. I didn't believe it. And it took me a long time to build up that confidence and to build up that passion and confidence and investment in myself to say that I'm worth that much. Right?
Wow.
I'm pumped up, man.
Man, did he unpack that thing or what?
Yes.
And so, hey, I just want to make sure we tell people, if you want to see the whole, that was 8 minutes of an hour packed town hall meeting. And so if you want to see the whole thing, go to YouTube, search for The Real Money Coach. Now, I'm asking everyone who's listening, who's watching, please subscribe to our YouTube channel. It's very important. We're trying to get our subscriptions up for some things with YouTube. So we're just asking everyone to do that. But if you want to see that whole video, go there. You can see the whole video there. And you can also see the one that he did for us a couple weeks ago, which was part 1. So that was part 1. You just saw 8 minutes of part 2. And then next Thursday, he's going to come and he's going to finish up part 3. So listen, I know we're at noon and some people probably got to jump off, but I just want to open it up and get some comments from people. What you thought about what you just heard from Eugene Mitchell. How did it impact you? What thoughts come to your mind? And, I can tell you my own story, man. My own story in terms of this thing about life insurance is that when my mom passed, man, my mom had 6 life insurance policies and none of them paid because she didn't get the proper counsel of what to buy. And so we're at the funeral home. We find this out, and I tell my dad that I would pay for the funeral. My uncle and I, and my dad wouldn't have it. He wouldn't have it. He says, "I will not let you pay for your own mother's funeral." You know, there was no GoFundMe back then. You know, it was like, you know, if you were raising money for a funeral, I mean, it was chicken dinners, fish dinners, that type of stuff. But my dad said no. He says, if I have to borrow money on my house to pay for the funeral, I will not let you pay for your own mother's funeral. So my dad did just that. He borrowed money on his house to pay for my mom's funeral. And that's one of the things that really drive me, is that if I can help other families not go through those types of situations, then I think I've done myself some good. Marlon, I know that you have a tremendous story. And I'm cutting mine off for the sake of, because I want people to hear your stories about your brothers. And then I want to hear from the audience. If you have anything to share, you know, please do so.
Yeah, you know, as you heard, I mean, this is really very dear to my heart as well. And when you think about it, tomorrow's not promised. But isn't it true that we live as though tomorrow is promised? And even just a few weeks ago, I've had 3 classmates pass away. You know, one a high school classmate and 2 college classmates, all within 12 days of each other. And one of the things that really strikes me, and I feel very blessed to be part of this movement, is because February 2009 was one of the most challenging years of my life, because February 2009, I got a call saying that my brother Sean had died. Sean was 2 years younger than me, and I flew up to Washington, D.C. And the night before the funeral, we were at the funeral home for the wake. And I was in his in the room. There's his body in the casket. And what was so amazing is I was looking at my brother. First of all, I was just in disbelief. This is my brother I grew up with. You know, we fought, you know, we played. I mean, this is my man. And the casket, he was laying in the casket. And I just had this flashback to when my mom used to bathe us, Sean and I, in the bathtub together. And, you know, it was just very surreal, you know, to see my brother in the casket. And so that was very challenging as a daughter. And we had to come together, you know, emotionally, spiritually, and financially to support. Well, 7 months later, September 2009, I get a call, and my cousin's crying, and I'm like, what's going on? And she shared that my brother Greg, 8 years younger than me, had passed away September 2009, 7 months later. And so I fly up to Washington, D.C., and it was like deja vu, like a bad nightmare. I'm in the same funeral home during the wake, and my brother Greg has 4 kids, 4 children. And, you know, Greg was like 6'5", and, you know, longer casket. And I just said to myself, man, this is amazing. So right when you thought it was it couldn't get any worse, I get a call from one of my dear friends, Janice, out in California. And that was like Thanksgiving week, November 2009. And she tells me that my mentor, one of my closest friends, Bill Davis, when I was at Hewlett Packard, he was like my mentor. He had passed away. So I flew out there and, you know, shared, you know, the message for him as well as my brothers. And so, as Tony said, tomorrow's not promised. And what we want to encourage you to do is send an email to us. You know, let us just talk to you, right? I mean, I just shared the statistics, 111,000 deaths. 111,000 deaths in the United States over the last few months as a result of COVID-19. And this is real. I do not think at the beginning of this year, those 111,000 people thought they were going to die, right? So tomorrow's not promised. So let us, you know, just talk to you, connect with you. You know, that's what we're doing. I mean, as you can see, you can feel the passion, the sincerity of Tony and I. And so you can send an email to info@therealmoneycoach.com. so that we can, you know, share information with you and you know, talk about your family situation. So, you know, with that being shared, I'm very excited about all the comments, and we have definitely gone a little bit over. So thank you for still being here with us. I would love to see in the chat box, you know, what's your takeaway? What did you learn today from today's webinar broadcast? You can type it in the chat box. We got people all over the United States and even some international guests here. But, you know, Tony, how has this been for you? While people are typing the chat box, and would love to you, Tony, share, why are you so passionate about this, Tony?
Yeah. Well, and like I said, Marlon, for me, and I didn't even get to the story of my dad, but I've seen so many of our people over the 22 years that I've been doing this. They're doing two things, man. They're retiring, living off of Social Security only, barely making it, and then they're dying, and we are having to go to belt to charge a suit to put on the body.
Wow.
And that type of thing has to stop. We have to make up our mind that it stops here, right?
Right.
And I feel bad. I hope none of you are offended that we weren't able to get to all of your comments and stuff. But there's only so much time. Like Marlon said, you can email us, and we'll do our very best to get back with each and every one of you. But it's time for us to stop now. And I'm going to be honest with you, man. And a lot of times when we work in an area, as important as this is, and I'm going to be real. I'm going to be really real with you. As important as this is, and as much as I talk about it, my wife had to bring reality to me and say, hey, listen, you ain't got enough life insurance, dude. Because it's so easy to ignore it. Right. And we have all these stigmas about life insurance. I mean, over the years, man, people have told me things like, the reason I don't have a life insurance is because I don't want to jinx myself. Come on. That's crazy.
Wow.
And if I could specifically talk to brothers, man, don't leave your family out there like that. We're seeing what's happening to African-American young men in this country. We've seen what's going on with COVID. If you think you're invincible, God bless you. But ain't none of us getting out of here alive.
Right.
Yeah. And so it's important. It's something we're passionate about. You can talk about all the different stuff, right? You can talk about different types of insurance. There's term, there's whole life, there's universal life. There's all these different types of insurance, and that's all fine and dandy. But what they all do is provide protection. So get the protection. Tomorrow is not promised to any of us.
Right.
It's not promised to us. And we don't want to make this all, I go here because I always go to Jesus, because, on the cross, he looks down and he tells John, behold thy mother. And so even Jesus, and his example for us, dying on the cross, wanted to make sure that Mary was taken care of. So he says to the beloved disciple, John, behold thy mother. In other words, he wanted to ensure that his mom was taken care of on earth. Now, this is Jesus, and ain't none of us Jesus, none of us Jesus Jr., but even he on the cross was concerned enough about those that he would leave behind on earth that they would be taken care of.
Wow, man. Thank you, Tony.
And so I guess enough said. Man, we need to bring Wendy on so we can shut down.
Yeah,
Thank you all for indulging my moment. All right. Wendy,
you came from.
Hello. Good morning, everyone. Whew, that was a deep one today. I saw a couple of comments that said that this was really an eye-opener. Well, it's truly an eye-opener for me too. You guys are finally seeing me. I'm a senior, And I'm extremely interested to know if I am underinsured or just enough insured. So I'll be talking to the fellows over info at realmoneycoach.com. I'll be definitely getting in touch with them to find out my status. So this was a great show today. We've got some wonderfully led coaches here in Tony and Marlon, and we just thank you guys so very much. Just a reminder, if you haven't registered, go ahead and get registered, because we'd love to send you our weekly updates with the videos and slides and all the important information that we've been learning. Also, go to nationsforward.org/events and complete a class evaluation. We'd like to hear from you. Know what you think of the class, how it's been enlightening your life, and what changes you've been making because of this class. So I thank you guys. God bless you. You've done a wonderful job, and we're so happy that we are taking this journey together.
Wow. Thank you, Wendy. We appreciate you. Tony and I, I know it's just been a pleasure. When you meet someone and you see that they're so passionate, and, at Nations Forward Church, as far as your leadership, the team, it's just been really wonderful. Daniel and just everyone, that's really said, this is important. And as I said in the opening, we were talking about facilitating this before COVID-19. But again, it shows the visionary leadership of Nations Forward Church to say, okay, yeah, COVID-19's here, there's stay-at-home orders. Hey, let's take it online. And so thank you for partnering with us, the Real Money Coach, because again, we're all in this together, right? And I appreciate your transparency saying, hey, I'm going to follow up with the Real Money Coach. I'm a senior, and, let me see, my financial house, and what things get, and my position, for legacy wealth. So, want to say that, and then we'll let Tony share his, I know he's got something to share, and then I'll do the closing.
Always got something to share.
Right.
So again, I just want to just thank everyone for being with us today. And one of the things we know is when we start talking about some of these things, I mean, it can be a slap in the face, right? It can be a reality check for us. And we know it turns off some people, and we get that, but it's hard but true. It's hard but fair. It's not a conversation that it's easy to have. It's almost like talking about money in church. It's almost taboo. And so, we want to break that stigma in our community. If we don't break the stigma, we're going to continue to repeat itself over and over again. And so let's do better, people. You have no excuse. Your eyes have now been opened. You can't say you didn't know. You can't say you never heard it. And everyone's situation is different. People don't get all caught up in this, that, the other. I mean, just take off the mask. Let's be real, and just be honest and take care of our responsibility. So with that, on behalf of Marlon Smith, myself, Tony Jackson, Wendy, Cassie, the elders at Nations Forward Church, and all of you, we say have a blessed day, and we'll see you at the same time next week, and we'll start unpacking retirement. God bless you.
And I want to say one thing. I just got to say this because, one of the things, it's been a great show, and I'm really encouraged. I'm encouraged by, I see Dr. Benita Harris saying always so informative and helpful. I will be making my appointment to ensure I'm covered properly, right? I mean, as Tony said, none of us are getting out of this life alive. And so I've got 3 questions for you. Question number 1, are you 100% certain that your current retirement plan will not run out of money before you die? That's number 1. Number 2, what happens to your family if you experience a serious health issue? That's number 2. What happens to your family if you experience a serious health issue? And then number 3, if you lost your job or business income, could you pay your bills for 8 months? If you lost your job or business income, could you pay your bills for 8 months? You see, you can see today's show, it just really was rolling. I mean, the chat box, and that's why, again, I say send an email to info@therealmoneycoach.com. Why? Because it's all about realizing that, you know what? Okay, people say, if I knew better, I'd do better. Well, now, as Tony said, you know better. Let's make sure we're prepared for the unexpected. And let us work with you. Let us share. You can feel our passions, both Tony and I personally, on a very personal level. It's impacted us. And that's why we're so passionate. That's why we're so passionate. So again, I hope that you will, join us with this, complimentary, no obligation, just a financial coaching session so that we can really see, okay, are you okay? Are you protected? Those 3 questions that I just asked, are you covered? Right? Because one of 3 things are going to happen to all of us. Either we're going to live too long, right? And that's the number 1 fear of most retirees, is outliving their money. Or we're going to die too early, right? And, so many people are the 111,000 people that died just a few months within a, 3-month time frame because of COVID-19, they didn't expect that. Or are you going to get sick, right? Get ill. The number 1 reason for filing bankruptcy or foreclosure, I don't know if you know this, is unpaid medical bills. So today, risk management, insurance, it's so important. And so I'm excited, and we're excited to hear from you. info@therealmoneycoach.com. And remember, there's greatness within you, because what we learned today is that it's possible. It's possible. Our dreams, our goals, it's possible. And it all comes down to really doing a fair assessment, taking off the mask, say, okay, this is where I am now, but this is where I'm going. And now it's developing a roadmap and taking action to get there. So we'll see you next Saturday. Next Saturday, I believe we're going to be talking about a phenomenal subject. I'm not even going to share with you because you want to be there. Okay, I'll let you know. They put it up on the screen. Current retirement situation. We're going to talk about your retirement situation. Remember, I already said where you are now is one thing, but where are you going to be? And then after that, we're going to talk about investment in real estate. And then we're going to close out with entrepreneurship. Woohoo! That's one of my favorites, because I believe everyone should have their own business, even if it's part-time. So I am Marlon Smith, reminding you there's greatness within you. And invite a friend. Invite a friend. Tell your friends, your family, come join us, right? You can watch the recordings, but let them come next Saturday, 11 a.m. Eastern. And we're going to be talking about retirement. And so if you've enjoyed this show, go ahead and type in the chat box. Has this been worth your time? Has this been enjoyable? Did you learn something? Just type in the chat box. We'd love to see it, see your comments as we close out. So I am Marlon Smith, in partnership with my friend Tony Jackson, my colleague, the Real Money Coach. We say thank you. Stay blessed.
Let's pray out. Let's pray out, Marlon. Father God, Lord, we just thank you for your mercy today. We thank you for all that you've done, all that you've shown us. Father, I pray that there were seeds that were planted today, Father, that will come to harvest, Lord. Yeah. In whatever vineyard you choose to sow them in.
Thank you, Father.
We thank you. We praise you. We pray a great blessing over our country, our nation, our protesters, our police, and especially those who are dealing with the loss of life and loved ones. And so, Father, we just give you all praise, glory, and honor.
Yes,
for
Lord.
You are the answer to all of it. And we give you all the praise and all the glory. In Jesus' name we pray. Amen.
Amen.
Have a great day, you guys.
Amen.